Live stream started.
Okay. Shall I start?
Yes, sir.
Okay. Bismillah. Assalamu alaikum. Good afternoon. Salam, Sajitara, and very welcome to everyone joining today from UAE, Malaysia, and around the world. On behalf of Alif Group, it's great pleasure to welcome you today exclusive webinar Why Malaysia is Becoming Preferred Destination for Family Office and Global Business Expansion. My name is Saeed Asizaman, and I am the privilege of serving you as moderator. Before beginning, allow me to introduce Alif Group. We are international professional services and business advisory group with operations across UAE, Malaysia, Indonesia, United Kingdom, United States, Saudi Arabia, Qatar, Canada, and Pakistan. Our service spans business advisory, assurance, corporate services, investment advisory, and international business expansion. Through our operations in Malaysia, mainland, and Labuan IBFC, together with our strategic partner, we assist investors, family businesses, and entrepreneurs in establishing and expanding their regional presence. We are delighted to welcome business owners, investors, advisors, family office professionals, legal and tax practitioners, corporate service provider, and entrepreneur. Over the past decade, the global wealth landscape has evolved drastically. Families are increasing focus on protecting wealth, preserving it across generation, and creating robust governance structure. Business are, equally looking for stable, transparent, and business-friendly jurisdictions. Malaysia has emerged as one of Asia's leading destinations because of its political stability, sophisticated financial ecosystem, strong legal framework, and excellent infrastructure, and strategic access to ASEAN market, more than 380 million consumers. Highlights of the economy of Malaysia are they have a GDP of US 516 billion economy, 5.3 GDP growth in Q1 2026, low inflation rate around 2%, unemployment of approximately 3%. Today's discussion will cover Malaysia's family office ecosystem, wealth preservation, succession planning, Labuan IBFC regulated developments, and practical roadmap for international families and businesses. I encourage everyone to stay till the end of our interactive Q&A. Our first guest speaker is Fahmi. Mr. Fahmi, it's a distinguished pleasure to introduce Mr. Fahmi, Chairman of Malaysian Business Council UAE. Mr. Fahmi played a vital role in strengthening economic and commercial relationship between Malaysia and UAE. Through its leadership, the Malaysian Business Council UAE are actively promoted bilateral trade, investment opportunities, and strategic partnership while supporting Malaysian businesses expanding internationally and attracting investment into Malaysia. As a passionate advocate of Malaysia's economic development, he continued to promote Malaysia as preferred destination for investment and innovation and global expansion. Please join us in welcoming Mr. Fahmi. Mr. Fahmi, to you.
Thank you, Brother Asif. Thank you very much. Bismillahirrahmanirrahim. Distinguished ladies and gentlemen, Assalamualaikum. Very good evening from Malaysia. I am currently in Malaysia at the airport at the moment. I'm flying off to back to Dubai soon, so I have maybe half an hour. So I'll try to cut it short. But of course, good afternoon from Dubai. As I think likely most participants also are from Dubai or UAE or any other parts of the world. So thank you very much, Asif, for and Alif Group for organizing this. I am Fahmi Ansara bin Dahlan. I am the chairman of Malaysian Business Council UAE. So we are under Dubai Chamber of Commerce. We are registered with Dubai Chamber of Commerce in Dubai UAE. So it is a great for me to be here today with all of you, to welcome all of you to the very important webinar, Growing Wealth, Preserving Legacy, and Why Malaysia office and global business for your global business expansion. So on behalf of Malaysia Business Council UAE, we like Mr. Asif was mentioning, we try to promote as much as possible. The one is the beauty of Malaysia, and second is what Malaysia can offer to the world, especially to the UAE, where the council is based. So we try to promote all of this. We also promote, of course, export of from Malaysia to UAE and other parts of the world, but we encourage investment into Malaysia. So this is, I think this topic is very important as it relates for people to invest more in Malaysia and what Malaysia can offer. So the global investment landscape is changing rapidly. High net worth families, entrepreneurs, international investors, they are no longer, I believe, looking for financial returns. As you mentioned this, we're looking for stability, looking for a country that can provide a good governance, certainty in their regulatory, efficient tax structures that can, of course, protect and preserve the wealth of the investors and their investment for generations. So, of course, Malaysia is well positioned to meet all these expectations, as I think we all know, and perhaps we all about to learn today in this session. So, Malaysia offers unique combination of political, economic stability, well-developed financial ecosystem, strategic location at the heart of ASEAN, world-class Islamic finance capabilities, and an increasingly attractive framework for family office. This become attractive framework for family office and international businesses. Now we hear the conflict from the Middle East recently. We know that a lot of people are looking for options to go out maybe or to expand their business beyond what they have in Middle East. So this is again, Malaysia is perhaps for us the best option, because the Malaysian community or Malaysian market itself, location is a gateway for over 600 million people in ASEAN. And it's also where businesses can establish a regional headquarters. Now we have more and more of this. So as chairman of Malaysian Business Council, one of our key objectives, basically, like I said before, is to strengthen the business investment ties between Malaysia and UAE. So we are very much committed, and try to facilitate as much as possible business partnerships, opportunities, and also to learn from each other, so that we can learn from other businesses. So this webinar again is an excellent example of the mission. And today, I believe we've got a few outstanding panel of speakers, experts who will share their insights into the family office. In actual fact, I know but that we are going to move into this family office, but I'm also learning, and I also like to learn, what with the family office, what Malaysia can offer. So I would like to encourage everyone to take this opportunity to learn as much as possible, to engage. And I just try to summarize it. I hope that this session will continue with your participation. And Alif Group, I've known Mr. Asif for quite some time already, very, very capable. And we've done a lot of things together. So I hope he will be able also to consolidate everything and become the focal point for your interest and for your opportunities in terms of family office in Malaysia. So before I conclude, thank you again. Thank you very much again to all of you who participate and who joined us for these event sessions. Thank you for the panel of speakers. Sorry we didn't get much time to get to know each other very well. But of course, I know all of you, but we don't know each other. And Alif Group, Mr. Asif, thank you very much for this session, and I hope you will have a good benefit from that you can obtain from this session. And see you in Dubai in the next few hours. Thank you. Thank you,
Thank you,
Mr.
Bharat.
Over
Thank
to
you,
you.
Bharat.
Thank you.
Yeah, thanks a lot, Femi, and you're doing tremendous, job for yourself and for your country. Let me introduce our first speaker, international renowned person, Asher Noor, and he's a chartered accountant, and you name it. Is internationally recognized trusted family practitioners, chartered accountant, author of the book Shepherd of Wealth, having worked extensively across Middle East, Singapore, and Australia. He advised leading business families on governance, succession planning, wealth preservation, and family office strategy. He has been recently honored with 2026 International Award for the most impactful family enterprise practitioners by the Family Firm Institute Boston, and have been shortlisted for the STEP Global Private Client Awards. We are privileged to have with him share his insights on the evolving global family office landscape. Please welcome Mr. Asher Noor. Asher, to you.
Good afternoon. Thank you, Asif, for the generous introduction. I'm quite grateful to Aleph Group for inviting me to speak at this very insightful and interesting webinar. My aim in the next 5-10 minutes is to basically provide an overview of what a family office is and who needs one, and what to look out for in finalizing a domicile. Could I have the slides up, please? Yes, thank you. Can we move on to the next slide, please? Okay, so let's meet the Nawaf family. 2 generations selling herbal remedies, and then one fine morning, a very large check with an exit of the family business. Now, a fortune is a lovely problem to have, but it's still a problem. On Friday, they ran the business and they understood that in their sleep because they've been doing that for over 2 generations. But by Monday, the business was no longer theirs. And what they had was money, wealth, cash in the bank. And they never managed cash or wealth in that sense before. So nobody hands you a manual for that morning when an exit has happened. Suddenly what you have are bankers calling you, relatives with ideas, and maybe you have a tax bill that nobody mentioned earlier. So it's in times like these that family office is that exact missing manual. I'll come back to this family in my subsequent slides, because I think one real example beats any abstract examples. Can we move on to the next slide, please? So let's start by understanding what the distinction is. If you are with a bank, you are just one line on a spreadsheet because the bank has thousands of clients. But if you are a family office, it has exactly one client, and that is you. Everything it does serves that single family. So think of it like a private doctor, not some random walk-in emergency clinic, outpatient department. The doctor, the private doctor, knows your history, knows your habits, knows the things that you'd rather not discuss. Practically, a family office is a small company that the family owns. It might have 3 people, it might have 30 people. It basically sits between the family and every advisor that's out there, or any other service provider, or bankers, or lawyers. So the family basically speaks once. And that is what is called institutionalizing through a family office. This is what wealthy families all over the world aspire to create. Can we move on to the next slide, please? So, but then the question is, why do wealthy families aspire to create a family office? because the reality is wealth is really good at disappearing. The first generation builds it, the second generation guards it, improves on it, and then you find the third generation discovers sailing. So the proverb is crude, but it's accurate, and it's true across board, across generations, across cultures. And basically the drivers are simple: control, so that the decision is theirs; privacy, because rich families, they attract attention that they did not really ask for; continuity, so basically the money survives the founder and gets on to the next generation; and one clear view, uh, instead of 10 advisors who see a portion or a slice of the portfolio and nobody really sees the whole. So a family office basically exists to break the pattern on purpose and not by luck. Can we move on to the next slide, please? So now, what do family offices actually do? Now, people assume that it's like clever stock picking. Not really. It starts with investments, yes, but the job there in a family office is more about coordination, making sure that the property, the businesses, if there are operating businesses within the family office, and then the investment portfolio, they all pull in one direction rather than quietly working against each other. Um, and then, of course, then there's the layer of taxation, estate planning, succession. Now, these are all unglamorous plumbing kind sort of things, but they actually decide how much really survives from one generation to the other. And then we have the governance piece. And this is the one I think where basically people underrate. Governance means deciding who decides, who sits on the family council, what happens when cousins or other family members, they disagree, how the next generation earns a say rather than simply inheriting one. So most fortunes, as you might realize, are not really lost in the markets. They are actually lost in family rooms, disputes over dinner conversations that go badly. And again, then there's the philanthropy piece, which we'll take the Nawab's example, becomes personal. So, and a family office basically allows the family to create things, at least in this case of Nawaf, to create something like a herbal research foundation to keep the old trade alive. And it gives the family a shared purpose, a shared project that is not about money itself. And so this is what a family office enables. So it's heritage, it's legacy with a balance sheet. So basically the lesson here is that a family office manages the family as much as the fortune. Can we move on to the next slide, please? So the myth is that you need to be a billionaire to need a family office. That is absolutely not true. But yes, of course, you do need scale because, of course, a serious team is expensive and good people like to be paid well. And when you do the maths, you realize that a single family office means a dedicated staff. You need an office, you need compliance, you need technology, all of it for one family, one household. So it only makes sense when the wealth or the fortune is large enough to absorb that cost. Um, the figure that people usually cite is 100 million and up, but it's a guide. It's not a gate. Below that, families can still have an SFO, single family office, or they can go down the MFO route, which is the multifamily office route. A multifamily office is where there is just one centralized team serving several households, several wealthy families, splitting the overhead. It's like co-working space for the wealthy. So you give up some uh, bespoke attention, but you gain a far lower cost bill. And for most families, the trade makes sense. But the choice is not largely between single and multi. It is how much control you want, how much you are willing to pay for it. At 100 million for this Nawab family, they sit comfortably above the line and they can build their own single family office. They can join a multi-family office. Both are respectable choices. Can we move on to the next slide, please? So now this brings us to the question that the rest of the session is really about. Where do you base the family office? Now, people assume that it's purely a tax decision. Now, tax matters. Don't get me wrong. Tax is one factor, but there are many other factors that the families choose. So tax is not the only basis that families, because if you choose only on the basis of taxation, then you're at some point in time going to regret that. Regulation matters because you want a regime that is stable and that they take their own work seriously. Then you have talent. Talent matters because the family office is only as good as the people you can hire locally. And not every city, not every country has that talent. Banking access matters. It matters because while it might be boring, but it's an essential ability that's needed to move money and to open doors. Now, lifestyle matters. Lifestyle matters more than people actually admit, because the wealthy families often want to be able to enjoy life and do things their own way while having that financial security net around them. And underneath all of that is the word stability that the previous two speakers both clearly alluded to. So stability comes from political, legal, economic. So you're making a decision, a wealthy family is making a decision that is measured in decades. So a jurisdiction that looks attractive this year, but shaky over the next 20-year projection is not really going to fly. So Singapore, Dubai, Switzerland, Hong Kong, they're names that everyone knows. They've earned that status. But the established names or those jurisdictions or those domiciles are no longer the only serious options. And fortunately, we have newer hubs like Malaysia that are up and coming and are competing hard. So the honest answer to which one suits the Nawaf family, for example, is it depends. And I believe the next speaker is going to make that case for Malaysia. Can you move on to the next slide, please? So before I hand over, why does this matter today? It matters because the timing is genuinely unusual. We are living through the largest transfer of wealth, private wealth, in recorded history. As generations that built modern fortunes, they are now in the process of handing them over to the next generation. And we are talking in trillions moving over the coming 2 decades at least. Now, the Gulf region, the Middle East, GCC, and Asia, they're not watching this from the sidelines. They are building family offices at real speed, partly, of course, to manage the handover, but also partly to keep the wealth and the decision-making closer to home. So, again, going back to the Nawaf family, the choices made in this timeline, in this video, in this window, this time horizon, it's not going to impact them. It's going to impact their grandchildren. So that's how the compounding and the domino effect takes in place. If you don't get it right now, a drift happens, and you spend the next decade unwinding because of a hasty decision that you made. So this is not a conversation that wealthy families would be advised to park for later. Wealthy families deciding today are the ones setting the terms for themselves and for their grandchildren. Can we move on to the next slide, please? So the Nawabs have the money and they have a long list of questions. Now, I've given you some of those questions: who runs it, why it matters, who it suits, and where they might want to domicile. What I've not really actually given you the answer to is actually the last one, and that's deliberate because I would be straying onto the next speaker's turf. She has an answer, or at least a very persuasive case as to an ideal domicile or a jurisdiction. So I'll yield to her now and over to her as to why Malaysia. Over to you, Asif.
Yeah, thank you very much, Ashar, for your in-depth knowledge you have shared with us and your experience. And now I will invite the main star of this webinar, and Ms. Amardeep Go. It's a great pleasure to introduce her. She is the General Manager and Head of Investment Management Development Department at the Security Commissions of Malaysia, with more than 2 decades of experience in capital market, investment management, corporate finance, financial regulation. She leads initiatives that strengthen Malaysia's investment management industry and enhance its position as an international investment destination. She played an important role in advancing Malaysia's single family office framework and engaging with international investors. Today, she will share valuable insight into Malaysia's regulatory framework, policy initiatives, and opportunities available for international families and investors. To you, Ms. Amardeep.
Thank you so much for that kind introduction. Of course, a quick thank you as well to Arif and crew for this opportunity to allow Malaysia. I'm from the Securities Commission to do a presentation on, as what Ashif said, that's now the newest family office jurisdiction. Our single family office tax scheme is about 6 months old, and it is a scheme that is for 20 years. So in the screen here, you can see from the cover, you can see sort of like an island. So it is a man-made island where we have a new financial zone, which this tax incentive is offered within the zone. But the family and the advisors are of course happy to stay throughout Malaysia. Next slide, please. So, as briefly mentioned, of course, why Malaysia? We feel that we have a unique opportunity within ASEAN to offer the best blend of cost, lifestyle, and regulatory certainty, as well as, of course, the investment opportunity. So, as you heard briefly today, it's sometimes not all about the tax. And what we have advantage over our regional players, we feel, is not only a lower cost entry space, which is very important, and but most importantly, not compromising on standards. So Malaysia has, of course, a mature capital market ecosystem. There are wide range of experts that you also see today from Alif Group, legal advisors, trust companies, tax specialists, accountants, English speaking, that are here there to serve you. We come from a Commonwealth background, so we have the common law framework that is also similar to our regional peers. So we hope to offer attractive jurisdiction to manage wealth in a structured manner, using the latest tax efficient backgrounds to drive not only growth for the family but returns as well. There are many opportunities within this region that can be got from Malaysia, from ASEAN, and most importantly, I think our scheme, the assets are managed globally. Only 10% is to be managed locally. So it is very much a global play, but from a position within Malaysia. So Malaysia, of course, has the strong financial ecostructure, cost-efficient professionals that I mentioned earlier, but also most importantly, the lifestyle. So we are a top 3 destination for medical tourists, private education, and so on. So I won't dwell on that so much. We will give you the slides after this, but I quickly want to go through in just the next 15 minutes or so the key requirements. Next slide, please. So as you heard today, there is 2 types, a single and a multi-family. So the one on offer by Malaysia today is a single family. So single family means that everybody who is managing their wealth together in the family office must come from one family. So they are individuals who share the common ancestor. Of course, adopted children and wives are all included, but that is basically what we have. 20 years of assured tax certainty scheme. So the cornerstone of it is zero tax for all income, but the income is of course largely investment-based income. You cannot run your business operation from this vehicle. As you heard earlier, it is to manage the family's wealth and to maximize the growth opportunity and to house it in such a way that you can have that legacy and there's something for the next generation. Above the company that you have to set up in Malaysia, the single family office, above it, there's usually a trust as well. There's also other holding companies, and these can be offshore or onshore. So it is not that all the wealth is to be parked in Malaysia for the tax purposes. We do know that the wealth is owned through other holding companies and other family trusts, which is fine. The minimum amount of assets that has to be held in Malaysia to enjoy the tax break is 30 million ringgit equivalent. So that's less than 10 million US, right? And as I mentioned, this money is managed from Malaysia, and it can be managed with international global investments, and there is a requirement of 10% of that money to be invested in the local capital market and stock market. So that is where Malaysia gets the benefit or the spillover effect from it. But largely, we feel there are many investment opportunities for the 10% part, but the family to enjoy the 90% with global investment. So I'll go through that list shortly, but basically that is what I wanted to say. There's a requirement, of course, for substance, so it's not a shell company. You have to employ 2 people full-time in Malaysia. These can be family members, can be investment professionals, right? We can also be foreigners. You have to take a small office space for 450 square feet. Again, not very taxing. And the OPEX requirement is 500,000 a year. This is to pay your directors, pay your staff, pay your rent. So very easily to meet this number, you have to pay your co-secretary. And this is where when you pay for services, you pay the local service provider. So again, this is where Malaysia sees the benefit overall to the whole ecosystem by having this family money managed from Malaysia. Next slide. Okay, so as I mentioned that AUM, or the assets under management, of 30 million equivalent, 90% it can be invested in Malaysia or abroad. So we have global shares, global bonds, global funds, and the typical things you see in an international portfolio. But what I wanted to talk about more is, of course, the need for 10% investment into Malaysia. So the 10%, if you think of a 30 million AUM, that's about 3 million. Okay, so let's say your portfolio is bigger, then your 10% goes up correspondingly until it reaches 10 million. But after 10 million, it doesn't go up some more. It's whichever is lower. Okay, so for the local investments, of course, it's our Islamic capital market products. We also have all kinds of local bonds, government bonds, derivative. We also have venture capital funds, or you can give management of the 10% or any amount actually to a local fund management company that should show you a return profile. What can they get for you for investing that amount? The family can invest themselves because it's, of course, their money, or they can leverage on professional bankers and fund managers in Malaysia to also advise you. For the 90% of your investment, let's say globally, you can use any global expert you have also to advise you on where you want to invest your money. Then usually for the Malaysian part, they would defer to a Malaysian expert to give them the advice. This is all so that it meets the needs of the family. What are they looking for? What kind of strategy are they looking for to maximize their growth? Next slide, please. So a little bit I want to talk about is that, of course, these they are cross-border flexibilities for foreign family. So we want to assure everyone that our foreign exchange policies that you may have heard about only apply to us residents. Okay, it does not apply to non-residents who bring their money in. They are freely allowed to bring their money back out as well. To make sure that you have all the certainty with your money, as you see the last two lines there, we have a one-time registration also with our central bank to give you the assurance that money that you park in Malaysia under the scheme, it is freely repatriated out, even though you change the currency, you make losses, you make profits, and so on. So this certainty is also given by the central bank to assure foreign investors of certainty of fund flows. Next slide. So I also want to talk about the fact that we do offer within the scheme, okay, we do value family offices that set up. They are looked at as strategic investors into Malaysia ecosystem, and there is a fast track, long-term residency pass of the same amount of time that you have your family office. So if your family office is 10 years, the residency pass is 10 years. If it's 20 years, that's the maximum. It's a 10 plus 10 residency. So as long as the family office is still operating, the visa, the long-term residency pass is attached. So we give the pass to all adult members of the family. They can have their own. They do not have to always be dependent of one principal. They can be dependents to a principal. They can also get their own pass. This is for themselves and the spouse to work anywhere in Malaysia. Of course, the children is for the schooling. All private schools in Malaysia, there are many, whether from American, Australian curriculum, British, and of course these are available. When the children actually become adults, they can get their own residency pass as well. Okay, and for the social pass, people like the maid, people like your the parents and your parents-in-law even can come in also together, but they are more on a social pass that is attached. So there is flexibility, different passes. The SC Malaysia Securities Commission, we do act as the liaison with the immigration department. So we will tell them that these are our strategic investors. They have set up the family office tax scheme, and then the immigration relies on us to give that a pass. So it is a pathway that you are not alone. We are with you to get it done. So this is the most highest pass that we actually have, and it is now available for family. So this is something that we think is also an important component of the scheme. Next slide. So we want to talk about, okay, how difficult it is and so on. Of course, Alif and Group is also here to help you. But basically, for us, you have to incorporate that one company that I mentioned in Forest City address, right? You also have your management company that is usually a related company to the group. The owners of this company or the trust above it or the foundation above it must be members of that single family. So you can't mix very big families though. So this definition actually is the same as we have in Singapore as well. Now, you after you set up these two companies that are very there's no paid up capital or anything, you have to open a local bank account. Okay, so the local bank account serves as our KYC and the AML checks that is. So there is no other checking that is done by us separately. It's just opening of a private bank account. Okay, and then it's the substance. So over time, then you show us whether who are you hiring and have you got the office space. With that, you can already submit to us to give you entry into the scheme. So why you want entry into the scheme? You want to know that you are legally set up from now onwards. You are getting the tax exemption. Okay, so we'll give you a letter specifically from our minister to say welcome and you are in enter into the scheme. After that, every year we will check whether you actually meet the ongoing requirements to get the zero, which is what we just checked, that are you still having the office in Forest City? Do you still have the two people? Did you move in assets of 30 million? And did you so these assets of 30 million can be the shares of the family, right? Of course, or any other investments that they have, and doesn't have to be in money form. Of course, it can be wealth in different ways. And we will tell you, we will ask you whether 10% have you invested in the local market, local capital market, stock market. So that's about 5 things that you show us paper based, and then we will just give you a letter so that you are assured to our tax office that, look, I have a letter from the SC, I am zero tax payable. So we feel that these processes where we give this certification and entry actually lends trust and confidence. We are a new scheme, and we want to make sure that that journey is easy for you. So we are the one-stop center to help you, whether it's with immigration or whether it's with the central bank. We can of course also alert you to our local banks if you need that facilitation. Next slide. Okay, so we actually, just to say the call to action, of course, we have on our website and a dedicated web address that you can see there. You can scan that QR code as well, but on our website as well, there is a clear guideline. There is the forms are also clearly shown to you. You can see whether what is it all about. Also, we have FAQs to answer quite the typical questions we get. So we put it in a Q&A format. So that's all I have for today. But happy to take questions and happy to also get the request from email. So we have a dedicated email, as I said, and we will respond to every question. And then feel free to ask us any technical questions that you have as well through the email or through today's webinar, and we're happy to start that journey. Thanks, Asif.
Thank you, Ms. Amardeep, and very nice presentation and well explained. And hopefully the audience and the participant have understand and they may ask questions today or maybe on later. And I will move towards my final speaker, Mr. Anwar Misnan. And what yes. So yes. Mr. Anwar is an accomplished trust and estate planning practitioner, specialization in cross-border wealth structure, family legacy planning, multi-office solutions, governance, entrepreneur risk management. He is the chief executive of Infinite Dynasty Famous Limited Labuan. He will provide practical guidance on covering how Labuan IBFC as a platform helps establish the family office, international investment, and long-term wealth preservation. Welcome, Mr. Anwar.
Hi, Assalamualaikum warahmatullahi wabarakatuh, and a very good day to everyone. First of all, thanks and syukur to Allah Ta'ala, dear God, for this session. Thanks to Alif Group. Secondly, and thanks to Asif for the invitations to this insightful webinar. And of course, the star of today, Securities Commission, represented by Ms. Amadip. Thanks for your insightful regarding our Malaysian single family office scheme in a way. And then, of course, our distinguished panels, Mr. Ashir, and just now, our chairman. Okay. Okay. I take it as, okay, first of all, I don't have any slides prepared for every one of you. Okay. So I'm your slide, to be exact. Okay. I can't have enough thanks to Securities Commission of Malaysia, especially led by Ms. Amadip. The reason behind that, I believe, and I may got some condoned by Mr. Ashir in terms of family office setup, because Securities Commission back in September 24, if I'm not wrong, Mr. Amadip, yeah, I think you guys launched the scheme of Pulau Satu Family Office Scheme, if I'm not mistaken, that's the name. And it is only a jurisdiction for family office. As mentioned by Ashir just now, we have few other jurisdictions. Yet the beautiful of Pulau Satu Family Office Scheme in Johor, managed by, I would say, regulated by Securities Commission, is, I take it, the gazetted tax incentive approved in October 2025, if I'm not mistaken. Right? So that is where I take it is the key of this unique single family office in Malaysia. With that, the key for family office, especially the single operated compared to multi-family office, and to enjoy the tax incentive offered, as mentioned by Mr. Ahmadi, is 10 plus 10, 0%. That is so wonderful, and I take it as so beautiful, magnificent key. I name it Pulau Satu Single Office Scheme is a magnificent key to ultra high net worth. Yet, that is the beautiful fact. I believe Mr. Ashir can agree with me on that. Yet, I will recommend this magnificent key to be safe kept in the most ironclad vault, not in the mainland. Dear members of this participant, dear our distinguished panelists, we are open to offer any family office setup. And one of the jurisdiction that we are here today is in Malaysia, and we can do it in Labuan IBFC jurisdiction. There is not a mainland regulations. It will be on a specific jurisdiction under the act by itself. So it can just put us Labuan IBFC next to Cayman, next to BVI, is having their own jurisdiction law to govern all the matters in terms of financial activities. That is where Labuan IBFC is ready to serve and to answer in this Alif advertisement or promo flyers. It will be, I think, the item number 4 or number 5. How Labuan IBFC to facilitate family office as a whole. So with this next 5 minutes, I will bring everyone here to understand how Labuan IBFC as its own jurisdiction to assist in facilitating Pulau Satu single family office setup, and of course as a whole. Yeah. All right. I'll bring everyone into a simple mechanism of hand gesture. A family office should be set up in the objective was to shield all their wealth and assets. That is first thing first, is to shield from any economic, from any political that may interrupt the wealth of the family. First thing first, we have to shield. During the shield of the assets that you put up under the family office, either single or multi, and the wealth should be expanded. First, we have to shield. Second, we have to expand the wealth of the family. And the third, the most important thing is to reduce the risk in terms of friction. So as a whole, this 1-2 minutes, let's understand the importance of shield, how we should expand the wealth and manage the friction of the family wealth. So with that, what Labuan IBFC is offering, my dear participants, is first, in terms of shielding, we have the tools, we name it as Labuan Trust under Labuan Act by itself, or you can choose a Labuan Foundation under different act. So this is how we facilitate the wealth. This is also to condone, I think the slide number 4 or number 5 under the Securities Commission, the structure of single family office should you set up in Pulau Satu, the holding of the entity, the holding of the family wealth should be a trust, should be a family holding, should be an incorp. Then only you on board into a SFOB, the single family office vehicle, which be managed by the management company of the single office. So Labuan IBFC is ready to support Pulau Satu single family office scheme via its own family trust, or Labuan Trust we call it, or Labuan Foundation. Right? This is how we facilitate on the shielding of the asset, shielding of the wealth, one. And then we go to the second agenda of family wealth or family office, is the expanding of the wealth. In Labuan IBFC, we understand when we are talking to ultra high net worth, for high net worth, professional investors, sophisticated, yeah, they are not going to invest in I would say, it's a ready-made investment scheme. They will go into a very specific investment, example of private equity, venture capital, or that or alternative assets allocation. This is where comes with the tagline of high risk, high return. And it's a sure thing that ultra high net worth know how to expand their monies. Yet, Labuan IBFC as an advisor, we should assist them in protecting their each investment strategy via at least using the protected cell company in Labuan IBFC. In Labuan IBFC, we offer a protected cell company whereby in the protected cell company is a required mandatory a fund manager to serve with. So that it's a family, when the family office endow their assets 30 million into securities commission. And then Mr. Ahmadi did mention that from the 100%, you can bring it out, the 90%, remain 10% for local market. The 90%, you can expand worldwide via protected cell company in Labuan IBFC. Why do we need that? Because we believe, and it's a daily exercise, ultra high net worth or investors, sophisticated investor would rather go into a class A, so-called a high risk, high return. Class B, maybe a middle and a stable income. And last one, maybe on market, to be a very low risk. So this all segmentation of investment is able to be trade safely under the protected cell company, so that whenever that any of this investment bleed, it doesn't contaminate to each other investment. So this is what Labuan IBFC ready and have been offering to multi-family office previously, and now we are here to support single family office in Pulau Satu. Right? So the protected cell companies is the most wonderful instrument or tools in Labuan IBFC to expand your wealth. Right? So that is on the second set. So the last, of course, the answer I heard, I think from Mr. Ashir just now, who mentioned about the 3 generation curse, I would say. The first one is builder, second one is stewards, and the one is the spenders. Okay? Let's start in Malaysia. We are almost 70 years of independence. This is our 69 years. And 70 years, and Labuan IBFC have been 30 years in offering all the instrument. So let's bid. I urge us as advisors, us as a regulator, let's combine hand, educate, not educate, I would say, the word may be too harsh, kan? Let's campaign, make awareness, on let's beat this 3 generations rule that is a myth. I take it as a myth. Why? Because this 3 generation myth, it will worldwide discussed because it's very fragile in terms of human governance. The demolish of an empire, according to William Scott, if I'm mistaken, 70% is due to human governance. It's not because of money market. It's not because of the investment. It's the interaction between generation. So in Labuan IBFC, we offer a tools of, we call it a private trust company or a Labuan foundations, as I mentioned on the first one, on the shieldings. On this third part, the foundation should have an articles. When we set up on the first one as a shield, we should set all the charters, all the assets to endow the 30 million in numbers of shares. That's good. But on the third stage, after you expand, is to reduce the friction of human governance. And Labuan IBFC is ready to facilitate with a foundation where it comply with the charter itself. Sorry, with the articles, how to regulate. I would say, in my own words, that's how the steering should be. Who get what, when to receive, include the generation education or generation awareness of well-being of the family dignity, family values. And the reason I'm mentioning because we have to be aware, my dear participants, my dear advisors, moving forwards in this current digital era. Yeah, I personally have a few clients having their grandpa is a mining person, is a mining company. Their family built from plantations. Yet, under this current third generations, under good governance of the foundations, under the articles of the foundations, nowadays the third generation did not have any single operational function in their plantation at all. So what they did is react as a beneficiary rather than owner of the plantation. The owner of the plantation passed to the professional, but the family value was kept and still running as a beneficiary under a good article of a foundation, whereby they still uphold their family values, they still uphold all the philanthropy, they still uphold the charity that was created by their grandfather. So what I'm saying here in a nutshell, to cut it short, Labuan IBFC is ready to facilitate, ready to serve, and has been serving multi-family office throughout 30 years. Via shilling, via Labuan Trust of Labuan Foundation Instrument, expanding the wealth via PCC, the most favorite instrument, and reduce the risk of the family friction via private trust companies, which means they have their own trust company. It's only the family. A private trust company is a setup that only manage your own wealth of 30 million, what as mentioned in Securities Commission slides. Just manage the 30. This private trust company is not a private company that can sell and campaign or market the trustee services to others. No. This PTC, we call it Private Trust Company, Labuan IBFC, is only to serve at least the 30 million that they endow into Johor Pulau Satu single family office scheme. Right? So with that, these three most important pillar in a family office, I would say with four at least instrument in Labuan IBFC, which is the Labuan Trust again, Labuan Foundation, Labuan PCC, and Labuan Private Trust Company, it's an entry point to a good, healthy family office in this Labuan jurisdiction, whereby we are ready to support, serve, facilitate to Johor or any other jurisdiction or family office. With that, before I pass to Mr. Asif, my tagline I will come usually is, please be proactive, not reactive. Please be secure, not stressed. And the last one, please be grateful, not regretful. With that, I pass back to you, Mr. Asif.
Thank you very much. So nice of you, and very well explained that how Labuan IBFC is helping to move funds and other things in for supporting the single family office. And there are a lot of questions. I think there was questions on chat, this question box, and have been answered. And if somebody want to ask live question, they can raise hand and we can answer that. If Imayat is there, Imayat have posted some very genuine and very important question. Himayat, are you there? Can you raise hand so you can ask? Otherwise, I can read out the questions which you have posted. Anyhow, I will read out the questions which Himayat have posted. From the Securities Commission's perspective, what do you believe are the three strongest factors that differentiate Malaysia from other regional jurisdictions such as Singapore, Dubai, or Hong Kong? First, I will ask the same questions to Ms. Amardeep, and then I will ask insight from Ashar also. Please, to you, Amardeep.
Thank you for that. I think it's a very good question. So one of it is, of course, we see that Malaysia is part of your diversification strategy. We look to be complementary in nature. We don't really, see that there are strengths in every jurisdiction. So our strength, of course, is that if you look at our requirements, they are a lower um, entry requirements because we are the newest kid. So we are trying to be, of course, more competitive in that way. Another important thing that we feel is Malaysia as a whole, right? It's the strong financial structure, capital market, as well as the lifestyle component, which cannot also be overstated. And very simply, as what I spoke about earlier, is also that space factor, where we see that the rising cost that has happened to our regional peers is something that we it has not happened here, but without compromising on the quality of advice, the quality of lifestyle that you can get it as well. So that we feel is some of the functions, but again also seeing what the family needs are, what are they looking for. Is it looking for just park the money? Are they looking to also come over? And all these play then a very important role of where becomes the livability and the healthcare cost and so many other issues. So again, we see wealthy families also just having more options, having a plus one, having and they don't know yet when are they going to see where. So we see Malaysia as one of the places where they we say this like try us out. We are easy entry in, entry out, and we are quite assured that once people try us out and come here and see here and live here, they it will speak for itself, to be fair. So not a very technical answer, except of course to say that. But maybe I'll just read the next one. Are there
Amardeep,
upcoming
can I have a second opinion of
Sure.
that one from Ashar on this
Yes,
one?
please
Because
go.
this is the hot burning question. Will
All
if
right.
we go there, Ashar, can you please enlighten us?
I think my answer would be to each their own. To every family, wealthy family that is out there looking for something, first of all, the fact that Malaysia has raised their hands and said, we are also in the reckoning, that is a breath of fresh air. We have had historically some very credible international financial jurisdictions that have, over the years, evolved to wealthy family needs. But now Malaysia has come into play. It is impossible for anyone to rank them because each ranking will have their own human bias and would be very subjective. I am not in a position to say if Malaysia ranks number one. However, the fact that now we have a very clear idea as to what the regulations are, what the criteria is, what is the entry ticket, it's very easy to benchmark against some of those that are around for decades and make an informed choice. To each their own. That's how I would conclude again.
Thank you very much, Ashar. And the next question is that how is the Security Commission working to further strengthen Malaysia's ecosystem for family offices and international investors over the next few years? And are there any upcoming initiative or reform that global investors should be aware of? Amardeep.
So yeah, as we said before, we're still new, but we're learning every day about what investors look for, and I think that's why today the combination with Labuan also is where we see the sweet spot is that some of the as I said above the family office it's important to look at the, as mentioned, the protective cell, the secrecy in a trust. Ours is just a $2 company. Actually, nobody will know who is behind it, but be above it, you can have it managed through a trust structure, a foundation structure. So that is something we're still developing. As well, we are also trying to now expand the asset class. We hear Asif as well always telling us foreign companies, foreign real estate. So we're working to expand more types of assets that the family wants. We're also looking whether we could also put in digital assets and things like that. So that we are continue to expand to see that. We started off, of course, in version 1. We do see that in other jurisdiction there is development over the years, so we are also moving fast for that. Another one that we might move to soon is having a multi-family. As you heard today, multi-family is also very important option. So we are looking next about how you could have the fund manager directly working with a few companies together, and this will also help the entry cost or the more hand holding by different advisors. But then what is unique about Malaysia is you don't have to go through any particular advisor. You can use, as mentioned, accounting firms. You can move audit firms, tax firms, or family can actually approach us directly. There is also less formality with us. We actually do many rounds of consultation with the family directly, and that's when actually we can advise you based on your case. So that is also something we try to encourage, and having that more open door policy and also more facilitative, because we know we are new, and there are technicalities. So we invite family or anybody interested in the call. We can have a deep dive conversation as well, and to take you through some of the things. Yeah, hope I answered that question.
Okay, thanks a lot. There's one more question that many international family prioritize regulatory certainty and investor protection before establishing a presence. What key messages would like to share with the overseas investor considering Malaysia as their regional hub? So I would like to add on then later that whoever want to answer the key message, the Malaysia offers the most stable and well-regulated investment environment in Asia. The country has a strong legal framework based on common law and an independent regulatory system. International recognized financial institutions such as Security Exchange Commission, Malaysia, Bank Negara, and Labuan FSA. Combined with the political commitments to the attracting, the foreign investment and the extensive network of, about 70 double, tax treaties are there, infrastructure are there, and then ASEAN. It's a gateway to the ASEAN, around 680 million consumers. So these are the things which I personally think that Malaysia is the hub for that one, that it's a very good infrastructure. Financial institutions are very strong and well-defined laws and regulations are there. So coming back to the last one is for investor setup of family office, what are the most common regulatory misunderstanding and mistake you see, and what practical advice would you give to avoid them? Amardeep, the fourth.
Yeah. So I think for us, as I mentioned, most importantly is that come to us early, come to us directly, or come to SAIF, because we are here to dispel that common misunderstanding. I think, as I mentioned at the start, the most common misunderstanding we have, as mentioned, about Pula One joint venture zone, is that people think the family has to stay there and everything has to only be there in the zone. So this is just an island, because we made it into a zone to give more for the tax break purposes. But just to say very clearly for the family and for the advisors, and either than an office there in the financial zone for the purpose of substance, right? There is no restrictions on that, and you are most welcome to stay and to do business with the whole of Malaysia. Another common thing is they feel that with the pass, if they want to work, they must work at the family office. So we are saying no, you are a strategic investor to Malaysia. We welcome that you have decided to set up. You can do any other business or don't do business. You can come in and out as frequently or not frequently as you like. You do not have to become a tax resident of Malaysia or anything like that, unless you choose to for tax purposes you want to also move your tax residency. That is, we of course welcome that. But another common thing is that you don't have to work in at the family office, or only do that if you are welcome to do other businesses in Malaysia. Last point, sorry, I forgot to say, if you allow me, is that when we talk about investment in Malaysia, of course, what is unique is that for us, the investment is also in the real economy. So if you invest in tech companies, startups, or other types of companies in Malaysia, in under JV or whatever, that all counts as investment in Malaysia. So it's a bit unique from the other countries. It's not about only the financial types of instruments and the shares and listed and so on. You a lot of families we found in this short time, what is attractive to them is, oh, I was going to go into business here, I was going to invest anyway. All that counts as your local investment. It is not only that then you are doing business in Malaysia and then another thing you have to count for the local investment. So we feel these are differences that we had that actually became like an advantage. And that these are some of the common questions and confusion we get. So yeah.
Okay, just I want to add that what are they saying that practical advice would avoid them is that one thing is choosing the wrong jurisdiction or the legal structure, ignoring economic substance requirements, and failing to plan for succession or and family governance, overlooking cross-border taxations applications, not obtaining professional legal tax and regulatory advice before implementation. These are, I think, are the points which have to be kept for that reason. And there are a lot of questions going on. I will request later that they can add. But one question I want to take: how can one be licensed family setup advisor in Malaysia? Miss Amardeep, this is one our
Okay.
friend Brent. Yep, he's a lawyer. He's in DIFC, very well-known lawyer. They have a
I see.
practicing over here in Malaysia. This question from him.
So depends on what you mean by advisor. But if you are advising the family, okay, so they can get advice from whoever they feel is having. So if you are working for a family or advising the single family, there is no need for any license in Malaysia. If you set up a multi-family office where you say, I'm going to manage many office families, then of course you trigger the fact, like in other countries, Singapore and Hong Kong as well, you are doing fund management, because I'm telling you I can manage all your money for you. So when you hold yourself out and say that can do third party, not just one family, many families, then you have to become a fund manager. But that is fund management. Now you've used the word advisor, so it depends. If it's just advisory, there is no need for any license. As I've said before, it's only if you are managing money for other people and many other people, then of course you trigger the fact that you should have a fund manager. So if you're a lawyer, accountant, we don't have any need for you to have any license. In fact, setting family office is a tax scheme. The SE is helping because we want to give trust and confidence, and we want to help companies get certified. But this no license requirement by the Securities Commission for you to set up in the Forest City Pulau One, to set up that company and seek the tax. So this it is more that we are helping to do the certification on behalf of the government.
Thank you very much. And this one question is Anwar, this regarding Labuan IBFC, that they are asking about the 3% tax. You know that 3% tax. I think they have changed. I know a little bit about that. We are working. We are approved auditors in Labuan, but I want you to answer as an expert that what are the conditions for the 3% taxations in Labuan if you're setting up the company? Can you unmute?
Thanks, Asif. I think I think that's the question to be answered by your company rather than me. You are the tax expert. Okay, never mind. Just share my view. This is a tricky question. Okay, I will answer that question based on the advisory perception, yeah, not from the tax consultant. Okay, so the 3%, yes. First of all, is it a trading or investment holding? I will ask that. Yeah. If a distribution, okay, I'm talking from advisory, not in terms of operations. Yeah, I would think it's a holding investment. So any holding investment, then the return goes back to Labuan entity, is either Labuan entity, Labuan Trust, and Labuan Foundation, especially Labuan Trust. Then if you withdraw back, let's say the operation is in Pulau Satu, I would say, example. Yeah? Operation is in Pulau Satu. And then investment holding in Labuan. And then the amount that generated, the income that generated, the profit that generated from the operational side passed back to the Labuan entity or Labuan, Labuan Trust. Then the trust decided to distribute back the dividend, then will be on zero tax. So the reason I say that, because your question is how the 3% works. So I don't want to hit the 3%. Let's enjoy and optimize the tax incentive in Labuan. To enjoy that, make sure your holding company pass the operation out, and once it's generated, back to the trust, and the trust distribute as a distribution of income from the trust. Then you can enjoy the zero rather than 3 that you mentioned, Asif. So I don't favor the 3%. I believe none of us enjoy to pay so much, yeah, unless we have to. Okay, that's as a nationalist, we have to pay, yeah. But then to answer to your question, Mr. Asif, yeah, I would rather to position and I would rather to ask the investor, were you able to endow into a Labuan setup under the trust so that it can invest out as a holding companies, investment out, and once the return is there, pass back to the trust and distribute as a distribution of trust assets rather than profits. That is how you should enjoy the Labuan IBFC offerings with 0%, not the 3%, Asif. That's my answer to you.
Thank you very much. But there are some criteria for having a 3% taxation for the agency services and trading company. In trading, general trading is not allowed. As per the definition, new
Yes.
definition in Labuan, it's only commodities and other things are trading are there in which 3% is required. And there is substance regulation over there that you must have 2 employees and a fixed office in Labuan. So the question answered, and rest, he can contact us. We can give more before I will take the last questions and then we'll close down, and a lot of questions are arising. But the least, yes, I have to have the final remarks from all the speakers there about the webinar, about that one, starting with, Asher.
Okay, so you're putting me on the spot. I'm going to make one comment, which is not really concluding the webinar, but I think it's a very important point to highlight. When we are in school, college, university, even when we are doing BBAs or MBAs, in our economics or business classes or commerce classes, we are taught about sole proprietorship, we are taught about partnership, we are taught about joint stock companies. And that's largely it. when we get into the practical field and we become chartered accountants, we become advisors, or even wealthy family members, when they start looking at structures beyond these three that I mentioned, sole proprietorship, partnership, and joint stock company, then their eyes open up to things like a trust. We mentioned this early. They come to know about foundations. They come to know about endowments. They come to know about PTC. Now, PTC is just a fascinating structure. Again, it's an Eastern versus Western mindset. The Eastern mindset cannot get their heads around the fact that you're going to give your wealth as a settlor to a trust. But there you go. You have this amazing PTC structure. I'm just going to leave it there. I'm not going to explain that. Anwar is smiling. He understands that. Amardeep understands that. Of course, for Amardeep, this is a structure above her family office structure, which is just a plain vanilla company. But again, some of the stuff that Anwar and Amardeep have mentioned is just, again, given the shortage of time, we can only scratch the surface. But people on the call, if they can go back, research, or reach out to Aleph Group, to Asif, and try and understand the amazing concept of a PTC structure coupled with a family office structure, how does that really help? So again, fascinating webinar, excellent speakers, lots of insights there to think about. But that's all from my side. Thank you for having me.
Thank you. Anwar, please.
All right, 1 minute. Okay, I would like to condone and agree with Ashir just now. Okay, yet it's not the jurisdiction that we should think of. We should think about how quality is the trust, how quality is the article of the foundation should be, and how quality the trust deed is drafted, and how professional is the trustee to behave over the assets, as mentioned by Amade. If you want to invest, it's not you, it's the fund manager. And the governance of all party involved. It's not just a settler. It's not just a settler, the settler or the trustee. The beneficiary behavior is among factors to make all this wealth passing on and on and on to be achieved. And last, the regulatory oversights. In Labuan, we have one central, but in domestic, we have SC, we have Bank Negara, we have the central bank, we have the SSM, the incorporation. So all does matters. To recap, again, please understand, I would say the wealth family or the second generation must be in the same wisdom of family legacy. Back to you, Asif.
Thank you very much. And I will close with the closing remarks and from Ms. Amardeep. Please, to you, Amardeep.
I think I want to take opportunity to thank you for putting together this panel and all the wealth of knowledge that was actually crammed into a short time. Unfortunately, I think we have to say this topic, although it does require some advice, to navigate it. And so again, all the panelists here today, I urge you to reach out to them. And like I said, we are very used to this not being a one conversation, and it does require that kind of advisory. And so again, please visit the SE website, Securities Commission Malaysia. You can also get a wealth of information there. And as I said, please get advice. When we see families directly, we always tell them, you need a mini village, at least, have some advisor. Although we can also deal directly with the family, we don't know what we don't know, in a sense, about your wealth and actually what. And so we always advise you to get a little bit of advice before you come, so that you know how to navigate to the best for your family business. Yeah, that's what I want to say. Thank you.
Thank you very much. And thank you, everybody. On behalf of Libu, I extend my sincere appreciation to our distinguished speakers for sharing their expertise and practical insights. I also thank every participant for joining us today. We hope this session has provided valuable guidance on why Malaysia is rapidly becoming one of the world's preferred destinations for family office, wealth preservation, and global business expansion. We're looking forward to welcoming to you for future Alif webinars and events. Thank you very much. Stay connected and have a wonderful day. Thank you very much, everyone.